So welcome back to a new chapter, chapter 9, Accounting for Partnership. So let's look at the content of the subject. In this chapter, we are going to talking about features of the partnership, rules and regulations of the partnership, partnership deed, then how we are going to account for partnership, current account, capital account, and appropriation account, and journal entries, right? Then next one, we are going to look at the treatment with regard to the guarantee of profit to a partner, then how we are going to record and calculate goodwill. So when the accounting ratios or the partnership profits and other things are changing, how we are going to account for the partnership. Finally, we are going to record the revaluation of assets and liability, and we are going to identify the impact on the partnership accounts. So let's move on to the first area, the features of the partnership. Not like sole proprietorship. In the partnership, we have 2 to 20 people. And the purpose of this partnership is to make a profit. When there is no profit making or social welfare, we are not going to recognize it as a partnership under Partnership Act. Then there must be a common agreement. This agreement can be in a deed or it can be a listed agreement with all the partners. Then there must be a business activity as well. So let's look at the rules and regulations govern the partnership. So you all know that in A-levels you have learned this partnership. This Partnership Act or the Partnership Ordinance in UK is governed the partnership in Sri Lanka as well. So the Partnership Act 1890 is the main act governing the partnership, and it states that the partnership businesses are primarily governed by this act, and if there is no own partnership agreement, then this act is act upon the partnership. Then the next one is the Company Act number 7 in 2007. This emphasizes on the number of partners should be 2 to 20. Then Business Name Ordinance Act number 6 in 1918 says that if the partners continue the business without their own names, then it is necessary to register the business under this act with the new name. Then Prevention of Fraud Ordinance Act number 7 in 1840. So if the initial capital of the partnership is more than 1,000, there should be a written partnership contract for the business. Addition to this, there are several regulations as well. The regulations of income tax governing the Sri Lanka, as well as tax and other rules and regulations imposed by the local authorities is also applicable to partnership. Other than that, in the Partnership Act, Section number 24, the directions when there is no partnership agreement, and Section 42, the pay 5% interest rate for the partners' loans, as well as Section 519 in the Companies Act number 7 of 2007. It says the maximum number of partners is limited to 20. So let's see the partnership deed. The partnership deed is a written agreement between partners containing all the terms and conditions about the partnership. Here, the rules applicable in the absence of partnership deed would be the partners shall share firm's profit or losses equally. If any partner has given some loan to the firm, he is entitled to take interest on such loan at 6% per annum. Then no partner is entitled to get any remuneration as salaries, commissions, fees, etc. If no interest is allowed to partners on the capital invested by them, then it says no interest will be charged on the drawings made by the partners as well. So these rules will be applicable when there is no partnership deed. But when there is a partnership deed, according to that, they can decide the profit sharing ratio, the interest for the partners' loans, then the drawing interest rate and capital interest rate. So they can decide upon it with their own discretionary terms. So let's see accounting for partnership, and this is different from the sole proprietorship. In the sole proprietorship, we have only this capital account and all the profit losses recorded in the comprehensive income statement, and it's only allocated to the equity because the only equity holder is the sole proprietor himself. But here, since there are many people involved in, we can see three separate set of accounts, new ones, right? So one is capital account, in Sinhala you know as its Pragdana Ginuma, current account, Jangam Ginuma, and finally profit and loss appropriation account, Labha Ha Alabha Visarjana Ginuma. So these are the three types of accounts you can clearly identify in the partnership. So the difference between the capital and current account. So what are the differences, right? In one sense, there is no difference, but a partner's total capital is the sum of the balance on their capital account and their current account. In practice, however, it is convenient to separate the amount invested by the partner, the capital amount, from the amount they have earned through the trading activities of the partnership, which means the current account. Therefore, the capital account is usually fixed, and the current account is the current total of the appropriations and the share of residuals of profit or loss, less drawings. Remember that the partner's drawings will be debit entry to the partner's current account. So let's see the structure or the format of the partner's capital account. So you know the partner is the owner of the business, and because of that, it's usually equal to the capital. Normally, the capital balance is the credit balance. So the brought forward balance will be there in the credit side. So when they have interest, extra capital, we have to credit that one into the partner's capital account as well. Then the share of goodwill, that's the capital nature of the transaction. In Sinhala, we are known it as Kirtinamya. It also debit to the goodwill account and it will also credited to the partner's capital account. Then the revaluation gain, the partners has the ownership of the capital reserves. So this revaluation reserve is a capital nature of the reserve, and the revaluation gain is belong to the partners. So we are going to debit the assets of the revaluation and we are going to credit the partner's capital account based on the revaluation gain. Finally, the balance is carried down from the debit side of the capital account and it will brought forward to the credit side as well at the end of the period. So let's see how we are going to record the partner's current account then. So in the partner's current account, the structure or the format is normally it's also belong to the owners. Therefore, we can see here there is a credit balance as well. So we are going to record the credit balance in the partner's current account, the brought forward balance, and the salaries belong to the partners are going to debit to the salary account and we are going to credit it to the current accounts. So if the partners have invested capital, if they are allowed to get the interest based on the capital, then the interest would be debited to the interest account and we are going to credit it to the capital account. Then if they have provided a loan for the business, so they have entitled the loan interest. This loan interest also we are going to debit to the loan interest account and we are going to credit to the partners account because they are the things that partners have the right to earn from the business. Then the share of profit also debit to the profit appropriation account, and we are going to credit it to the current account. Even though we have these lot of credit entries, now you can see we have the debit entries as well. The first one is drawing. So when they have doing a money drawing or in goods drawing, then both of them are going to debit to the partner's current account. So based on this, their capital will be reduced according to their value of the drawings. Then the interest on drawing. So when they are going to do a drawing, if the partnership deed provide that they have interest based on their drawings, it will debit to the partner's current account, and we are going to credit it to the profit appropriation account. Finally, the balance would be carried down from the debit side, and then again it will brought back to the credit side as the balance brought forward. So let's look at how we are going to record the next account, that is partners profit and loss appropriation account. So before that, I want to note several key areas. The balance of the capital account show the balance of each partner investment to the partnership business, and balance of the current account shows the balance of each partner, the volatile terms or the floating terms. It can be fluctuated, and the loan of the partners, this is shown under the current account of the partners, and it is an asset to the partner, but in the business, it will be a liability. So in the business has to repay this loan back to the partners because they have invested it in terms of a loan. So let's look at the journal entries. So here in the journal entries, first we are going to look up the interest on capital, then interest on drawing, salary or commissions, how we are going to record it for each partners, then transferring the profit to the reserve and transferring profit from the profit and appropriation account to the current account, transferring of loss from profit appropriation account to the current account, and finally the interest on partners loan to the firm. So let's check out the entry for interest on capital. So normally the partnership deed will provide the interest on capital, right? So it will give as a percentage per annum. So we are going to debit the interest on capital account, and we are going to credit into the partner's capital account. If not, normally we are going to credit it to the partner's current account because it's have a floating rate. So then we are going to transfer the interest on capital account to the appropriation account. So we are going to debit the profit appropriation account, and we are going to credit the interest on capital account then. So normally you can see we can debit the profit appropriation account, and finally we can put it to the current account. So by combining these two entries, we can write a one single entry, that is we can debit the profit appropriation account and we can credit the partner's current account. So let's look at how we are going to record the drawings. Normally in the sole proprietorship, we are going to debit the drawing and we are going to credit it from the capital. But in the partnership, the interest on drawing is charging the interest on drawing percentage per annum basis, and we are going to debit the partner's current account and we are going to credit it to the interest on drawing account. Then we can transfer the drawing to the profit appropriation account. So we are going to debit the interest on drawing account and we are going to credit the profit appropriation account. By combining these two, by merging these two, we can write a single entry. So we can debit the partner's current account and we can credit the profit appropriation account by joining these two. So let's look at how we are going to record the interest on drawing. So normally this interest on drawing can be done at the beginning of each month, at the end of each month, and at the middle of each month. At the same time, they can do the drawings whenever the places they need. So if they are going to do it on regular basis, so we are going to calculate the average period to calculate the interest on drawing. So if they are going to do the drawing at the beginning of every month, the average period would be 6.5 months. So if they are doing the drawing at the end of every month, right? So the average period of drawing would be 5.5 months. So when the drawings are made at the middle of the month, the average period would be calculated as shown as 6 months. So you are familiar with this average period in A level. So you have to remember in the beginning, the average period would be 6.5 months. In the middle, it's 6 months. And at the end, it will be 5.5 months. So let's look at the sum. So this John is a partner in the firm and he withdraw 5,000 per month regularly. So PM means per month. So he are going to withdraw regularly 1,000 rupees. So interest on drawing is 5% per annum. They are asking us to calculate the interest on drawing using the average period. So if we draw at the beginning of every month, so how we are going to calculate? So earlier I have mentioned you the average period, how we are going to calculate it. So the total amount of withdrawal would be 1,000. Per 12 months, the total would be 12,000. So how we are going to calculate the interest on drawing? So first we are going to take the total amount of drawing. Then we are going to multiply it with the rate of interest on drawing. And finally, we are going to consider the average period and we are going to divide it with 12 because we are going to take the monthly interest. So here, in the first one, we know that average period is 6.5. So for the equation, we are going to substitute 6.5 and we are going to divide it by 12. So we can get the drawing interest as rupees 325. So if the middle of the month we are going to withdraw or the drawing, then the average period would be 6 and the interest on drawing would be 300. So if the drawings are made at end of every month, then the average period would be 5.5 per month and the interest on drawing would be 275. So normally it's a practical application of the equation with the amounts. So let's look at how we are going to record it. So normally, when it comes to salaries or commissions payable to partners, the partners have right to earn salary or commission for the service provided to the partnership. But it is not a compulsory thing to give a salary or commission to the partners. But if the partnership did mention to give a salary or commission to the partners, if they have embedded it in the deed, then what we are going to do is we are going to deduct our profit and we are going to allocate it among the partners based on the deed agreement. So on allowing salary or commission to a partners, we are going to do is we are going to debit the partner's salary or commission and we are going to credit it to the current account. So in closure of the salary or commission account, what we are going to do is we are going to debit the profit and loss appropriation account and we are going to credit the partner's salary or commission account. So as a summary, we can debit the partner's profit and loss appropriation account and we can credit the partner's current account. So let's look at how we are going to record the entry for transferring part of profit to the reserve or how we are going to record the profit and loss. So when there is a profit, we are going to transfer it from a general reserve. Then we are going to debit the profit and loss appropriation account and we are going to credit it to the reserve account. By way of this, we are going to ensure we have a reserve of the partnership profit, and this reserve will provide the way when there is a necessity of the fund. And when there is a profit for the business, what we are going to do is we are going to debit the profit and loss appropriation account, and we are going to credit it among the partners based on the profit sharing ratio. Then when there is a loss, the same is applicable. We are going to distribute among the partners based on the profit sharing ratio. But here we are going to debit the loss to the partner's capital or the current account, and we are going to credit it to the profit and loss appropriation account. So let's look at how we are going to pay interest for the partner's loan. So it's treated as a charge against the profit. Hence, the interest on partner's loan is debit to the profit and loss account and not for the profit and loss appropriation account. So you know that it's a expense for the firm. Therefore, it's not going to put into the profit appropriation account. Rather that we are going to put this interest on the loan into profit and loss account. Here, normally the income statement, right? So the entry for the interest on partners account would be, we are going to debit the interest loan account and we are going to credit the interest accrued account if we are not going to provide the loan with the cash in that point of the time in that point of the accounting period. So when we are going to pay the money, we can put the cash account credit and we can debit the accrued interest account and we can settle this account. So when closing the interest on partners, what we are going to do is we are going to debit the income statement and we are going to credit this partner's interest loan account. So in a summary, we can say what we are going to do is we can put it into the income statement, we can debit the income statement, and finally we can credit it to the partners. Normally, we can credit it to the partner's current account, the loan value. So the next one would be how we are going to prepare the profit and loss appropriation account. By mentioning and by gathering through all the journal entries, this is a summary what we can see. So we are going to debit the salary, commission and interest on the partners, and whatever the amount we are going to transfer to the reserve, we are going to debit it. Then we are going to credit the profit or loss from the profit and loss account. Then we are going to put the interest on drawing. Then we are going to enter the losses if there is from the business. Then we are going to share it among the partners. So you can see here, when there is a loss, what we are going to put it, we are going to credit the profit appropriation account and we are going to debit the current account. By debiting the current account, we are going to reduce the capital or the ownership of the business. Then when there is a profit, what we are going to do is we are going to debit the profit and loss appropriation account and we are going to add it to the partner's capital or the current account. By going through this, we are going to add more equity for the partners. So let's look at how we are going to record this profit. So when there is a profit, as I mentioned you earlier, we are going to debit the profit and loss account and we are going to credit the partner's current account. So when there is a loss, what we are going to do is we are going to debit the current account when we are going to credit the profit and loss appropriation account. So let's look at how we are going to record guarantee of a profit to a partner in the next session.